Hello again, everyone. In this technical analysis of the stock market video, I call it A New Hope because, no, it's not a Star Wars movie, because the market is acting like it has a new hope that the trade war will get settled sometime in October, either a truce or some kind of an agreement, and that we're going to get rate cuts out of the Federal Reserve. And that meeting is happening this week, Tuesday and Wednesday. We're going to hear from Fed Chairman Powell on Wednesday and then his press conference, so that we'll get some fireworks this week for sure. And we'll see if the market continues rallying for the rest of September and in anticipation of some things happening in October. So right now, the market was down 2.18. I'm looking at the S&P 500. If you're wondering what I'm looking at, I got rid of the big titles up here, because it kind of, a lot of times it conflicts with the bars on the chart. So we've got the description right here. It says S&P 500 index. I've got, the ticker symbol right here, SPX. And down, we also have the timing. This tells you I'm on a one-day version, okay, one-day bars in here. And it tells you same thing down here, 1 day versus 1 week, etc. So this is the picture for the S&P 500, very tight little consolidation. Now, it's not the tightest in several weeks because it was a little bit tighter here about a week ago. So now we'll see what happens this coming week. We're very close to coming up here and taking out the all-time highs in July 26th, both the closing high as well as the intraday high. We almost did that on Thursday in terms of the intraday high. Got very, very close. Now, for the week, here's what happened. Third week in a row, we were up 28.68 points on the SPX. So that is the picture. It continues to ride above that 10-day moving average. Nice, strong move in here. What am I doing with these dotted lines? What I've done is I looked at this and said, well, this is quite a bit of consolidation trading range that this was in for basically all of August. In here, a nice trading range. And many times when you break out of a trading range like this, you go the distance equal to that trading range, and that would put this up around 3060 as a potential target. So I'm keeping that in mind to watch to see if we continue to push. Now, we push above these all-time highs than any bearish scenario that I had as any kind of intermediate or short-term bearish scenario. This goes out the window because this can't be a 1-2, because a 1-2 cannot go beyond the start of wave 1. So that goes away. And I've actually, as I talked about in the video last week, I'm leaning more towards, I've been leaning into this bullish scenario. And what do I have here as an Elliott wave count on the bullish scenario? It says we're in a wave 5. Let me zoom back out a little bit. It says that wave 4 completed back here in December, that we're in a wave 5. I have a feeling, although we're going to, it has yet to be confirmed, that we are in an ending diagonal pattern. What do I mean by that? I mean, we're talking about this overlapping 1, 2, 3, 4, and then 5 in here. And if you're in an ending diagonal pattern, each one of these waves should be a zigzag. Okay, so that's what I'm watching to see if that truly plays out. And the other rule that I'm watching in here is that wave 3 can never be the shortest wave. Well, right now, up here at 31.35, that's where wave 5 will equal wave 3. So that's another marker that I'm watching. We cannot, if we push above 31.35, then this little wave count, this ending diagonal pattern is failed, basically, is what happens. So right now it's in play. And, again, it's just like anything else. You lay out the path forward and you let the market tell you either it's wrong or it confirms it, okay? The alternate count I've got in here, and let me grab my marker. The alternate count is that we've got this 1, 2, but instead of 3, 4, it could be, see how I have it labeled A and then B? This could be A, B, C of a third wave. Okay, that's the alternate. So that then we're looking at 1, 2, 3, then a 4, and then a 5th wave to come. So that's another possibility. And of course, there's still, if we start to get very impulsive, we've been struggling with impulsive price action. We could have just a more traditional impulsive wave count, but right now I'm leaning into the ending diagonal pattern here for a wave 5. All right, so that's the S&P. Let's take a look at the VIX. The VIX continued to pull down here, continued to sell off. We're down back into this area where we had this trading range back in July, where everything was very, very low. Everything got real calm. I called it the calm before the storm, and then the storm erupted. Okay, so you get this VIX down in the cellar here, down in this area, and then all of a sudden you get these eruptions. The real unknown is how long are we going to stay down in here? Well, we're here. We'll just keep an eye on it. Okay, that's the picture on the VIX. Let's take a look at interest rates. 10-year yield has been rocketing here the last week and a half. This has exploded here to the upside. We've gone from all the way down here about 1.43% to that's the way you read this. It's 1.903%. Okay, so right now I've kind of ballparked a potential resistance zone right in the middle of all of this trading range in here, congestion, up just slightly above 2%. So I would expect this to push up into that, and I think it's going to get resistance once it gets back up into that area. Let's take a look at TLT. So TLT has been going in the opposite direction, and I expect that we probably don't have that much more to go, because that would be in sync with the 10-year yield running into its resistance. When I look at the Elliott wave pattern in here, I do think we're in a wave 4. Let me zoom back out a little bit. Okay, you can see the picture. I do think we're in a wave 4 pullback in here, and this is where the retracement of 4 versus 3, we've just reached the 38% level, which is what I typically would look for on a wave 4. Although after a strong wave 3, I wouldn't have been surprised to see only a 23%, but we continue to pull back in here. Now, when I compare the length of time of wave 4 to the length of time into wave 2, I think the first marker I would have would be right in here at 61.8%, and that would just be a couple of days away for completing that. So we'll see how this plays out. I think we should be getting pretty close to building in a potential turn in here for the end of wave 4, and we'll see what happens this coming week. All right, let's take a look at the home builders. Okay, here's the homebuilders ETF, XHB. Now, this is all the data I have. This goes all the way back in here into 2006. You can see in January 2018, we edged to a new all-time high. And then we had this huge correction in it. And now, we've had this pullback. I do think that we're still doing a corrective activity. We need to correct this entire 5-wave move that we had to the upside here. And right now, I think we had 5 waves down for wave A that completed in December of last year. And we've had this rally back. And it's really interesting that, to me, this looks like an ABC. And in that C wave, this looks like an ending diagonal pattern. So right now, I am watching, again, that same thing. I'm watching that wave 5 as compared to wave 3. If it pushes above 44.63, then this ending diagonal pattern just doesn't work, at least the way I've got it labeled right now. But it's interesting. Yeah, we've gotten a rally back in the home builders with the interest rates being really, really low. But if all of a sudden TNX does start to stall out, the 10-year yield does start to stall out, this may not go a whole lot further and reverse and come back down. So that's what I'll be watching here with the home builders. It's had pretty good run. And once we turn and once we come back down, I'll be watching for a breakdown, probably draw a trend line through in here, watching for a breakdown and head on back down and do this C wave of this bigger ABC, looking for the next move to the downside. So that's what I'm watching for on the home builders. Okay, that's it for this weekend. If you felt like the video was helpful, please give the thumbs up. And if you're not a subscriber to this channel, hit that subscribe button. And if you'd like to get more of this kind of information, head on over to my website at joehenches.net and check out the membership. Everyone, have a great weekend. We'll talk to you all in the next video.